person to know this yourself, because when you get onto the phone with the lenders, if you really know and understand what rules, what systems, everything that they're going to be using, then you've got so much more control over the outcome. And that's not control in a negative sense where you have to lie or that kind of thing. You don't have to tell the lender something that is even just PR or deceitful or whatever. Just be thoroughly honest, thoroughly open, be able to answer the same question 100 times, all exactly the same way, because you are following your forms and you're not making statements off the cuff about financial statuses of financial loan payments and other things. You're actually following your notes. You're looking carefully to make sure that ultimately when you do have to do a penalty of perjury, you can honestly say under penalty of perjury your facts are completely honest. So basically that is my recommendation for you. Double check those figures. Be honest and accurate before you turn those forms in. I know it's very difficult sometimes if you've already looked at the outcome and you can see that you're absolutely not qualified because you've got too many expenses or too much income. Still, regardless of that, please muzzle it. Do not end up on a list of being a liar loan person. So I definitely don't recommend that. So then the next thing that you have to look at is your total back-end debt-to-income ratio, and in order to do that, it's easy enough on the easy application form that we have. Look at that, and it'll just total it up on a separate column. And you have to include second mortgages there, third mortgages, things like that. You have to put you don't put you end up just really make sure that everything is complete on the easy app. That way you don't have a false figure showing up there. And also I recommend that you don't delete the fields, because you might also delete the programming from those fields. So if you end up having funky figures, just re-download that program and do it again. But make sure those monthly expenses are accurate. Generally speaking, an interesting fact is that lenders will allow usually for about $400 of food expenses per adult. Less, of course, for children. Of course, there. For any of that it's just a general allowance. It's not specific. If you have hardships that contribute to your costs of food, etc., being much higher because of cancer or other situations where you must have a special diet, etc., then make sure that you are indicating those things on your hardship letter. And when you're putting those things then on your financial form, it's going to have some bearing. It'll be backed up with some data so that the lender knows why that is that you did that. Now, your mortgage payment, your principal, interest, taxes, and insurance obviously need to get down to that 31%. And sometimes that front end is a flexible figure. And what I'm trying to say here is, you've got people who have companies, they own their own company, that type of thing. More and more, when your figures on your front-end income are exceptionally low, and you own your own company, a lender is really going to want to inquire very seriously into it. And sometimes they may go back 2 years looking at your tax returns, and then they're going to compare those tax returns and that income with what your current income is. And we all know this, that there's situations that can occur because of this, in that on one's tax returns you're looking for your best deductions, you're looking for your best scenarios so that you are paying the lowest amount of taxes. And those scenarios are not going to necessarily really show your income completely accurately. So when you are doing this, it is important for you to, again, stress what your income is, stress what your expenses is, stress, again, also the longevity of this income, compare it to reality. If your tax returns have oddball deductions that are just from properties you own. I mean, I've seen people they owned 8 properties and they deducted, uh, you know, uh, 1/10 of them in a year, and that made their income line look ridiculously low. I mean, all of this kind of thing is going to have to be more or less explained if you have this. So when you are explaining this kind of thing, either do it on your hardship letter or have a separate letter that you attach to your taxes as an explanation. But do take care to make this a simple explanation. You have to realize that a lot of these loss mitigators that are dealing with this and helping to analyze this are not really accountants, and they don't really understand how to read all of the forms that you're turning in, and they don't really understand how to give you credit where credit actually is due for income that you were making last year and whatnot, that in order to prove longevity of a certain amount of income, that type of thing. So those are just suggestions. Make sure that you are keeping your documentation in, and then showing, make sure you lower that interest rate again to 2%. You extend it out to the 40 years again, and then, and only then, go into lowering any kind of principal. And frankly, I think, unless you're a Fannie Mae, Freddie Mac as a lender, you're probably not going to get much principal reduced. So I wouldn't hold my hopes up too high, although it's not entirely impossible, and I have seen some non-Freddie Fannie defer the principal. Number 9, your hardship letter. Now, don't forget to include the hardship letter. I have actually seen people not include that, especially when you're looking at these new home affordable modification plan documents. Sometimes there's just a checklist, your hardship affidavit, and then people really don't actually write a letter along with it. And it is my advice, you could probably just write a couple of sentences on the last page, and that would suffice as well. But personally, I think in this case more is better, and it's a good idea to put it in a letter form with hardship letter on it, the date, your name, the loan number, all of that information, so that there's just no way, and then staple it to the forms, and have it be so that there's just simply no way that somebody's going to miss looking over those extra details. Also make sure when you're on your hardship letter, you need to include things like, is this a negative amortization loan? Or is this an interest-only loan? Or is this a 5-year fixed at a low interest rate, and then the adjustable rate is going to reset in 2 months? And you're trying to beat that date. So you are in what's called imminent default. And so if they go 4 points above LIBOR, which they've already told you in a letter they're gonna do, and that is going to bring it way the heck out of range, please put that in your hardship letter.